As Americans brace for President-elect Donald Trump's proposed tariffs, we're taking a look at the wide-ranging ripple effect it could have on building materials and other industries. Patrick Industries is one of the biggest suppliers of building materials to makers of recreational vehicles, boats as well. Joining us now, the CEO of Patrick Industries, Andy Nemeth. Thanks for being with us. Appreciate it.
Thank you so much for having me.
So we're trying to suss out the effects of all of this, right? So talk to us about it for your company. You guys provide supplies to RV makers, things that, paneling that goes onto the RVs, et cetera. So how's your supply chain look right now?
Sure. As one of the largest component suppliers to the RV industry today, our supply chain is very healthy. And as we're looking at the tariff impact that could be out there, we've really worked hard over the last couple of years to mitigate our exposure as much as possible and alternative source to different countries to make sure that we've got dual sourcing opportunities in our markets today. So we've worked hard to do that. There could be a little bit of impact, but one of the other things that we do is we provide a good, better, best product offering to our customers. So even if there is a little bit of tariff impact, we offer the opportunity for them to downscale or decontent a little bit to offset some of that. So we'll work actively with those customers, like I said, to mitigate as much of that impact as possible.
I'm just curious, Andy, when you say the last couple of years you've worked hard to kind of mitigate potential impact on the supply chain, was that in any way due to, listen, you all were kind of just reading the political tea leaves of what was going on in this country and recognizing, hey, we have to take certain steps, reorient?
Oh, without question. We saw kind of the environment changing. It felt certainly like there was exposure there as it relates to supply chain in general, just being able to procure product. And so we've been the last probably 2 to 3 years really active in mitigating our risk by more than a third from what we do in China. And like I said, we don't source a lot overseas. It's not a significant piece of our business, but there is risk there, and we've done it all we can to mitigate that.
Let's talk about consumer spending too, because there was an RV boom during the pandemic, right? Boating as well. Then we've seen it come down a little bit. So where are we in that cycle now?
Sure, we are at the bottom of the cycle as it relates to both of those markets, and they are kind of bouncing along the bottom right now. The good thing about it is that the inventory that's out in the dealer channel is really leaned out at this point in time. And so as we look at our business today, we see there's opportunity for a restock that the dealers are going to need to do at some point in time. Interest rates have been the biggest hangover that we've had as it relates to a dark cloud kind of affecting our markets, whether it's retail financing or whether it's dealer inventory financing. And so the dealers have really leaned everything out. So it's positioned very well, but they're bouncing along the bottom.
And so let me ask you this. I'm curious that when people are buying RVs right now, has the kind of RVs, the types of RVs they want changed, evolved at all over the last few years?
It absolutely has, and right now it's smaller units are the largest mix of units being sold. So it's
Why
really
is that, Andy?
Price point is what it is. It's the cost of the units, and the monthly payment buyers, are very focused on that, and so they've had to. The RV industry has done a fabulous job of, like I said, they as well offer a good, better, best kind of content offering to allow consumers up and down. But yeah, right now it's kind of low-end units and smaller units.
So so if it's good, better, best, are people buying smaller but maybe spring for the better finishes, or are they going more budget on both counts?
More budget. Consumers still want content in their units, even if they're a little bit smaller. But what usually happens, and where we get optimistic, is that those consumers generally upgrade over a period of time. And anytime you upgrade, you're going to move to a larger unit that's going to have more content in it. And therefore, as we supply our customers to the space, we're going to have more content in those units as well.
I have to ask you, Andy, also, these headlines I saw that we're going to have these 6 states that are going to limit, I guess, the sale of new gas and diesel-powered RVs. First of all, walk me through what is going on there. And secondly, how does that impact potentially your bottom line?
Sure. The push is really in California at this point, and there's 5 other states that are involved in this legislation that is effectively going to preclude the sale of RVs, of gas-powered RVs, and so the motorized sector of the industry. California represents about 15% of the total motorized market today on a retail basis, and then the other 5 states, if you add those together, it's a little over 20% of the motorized market. That being said, the motorized market is only about 10% of total RVs, so from our business perspective, it only represents about 3%.
What's the motorized market?
There's a motorized market, which is going to be a motorized unit, and there's a towable market. And 90% of the RV sales today are in the towable side of the business.
I did not know that.
But it does impact California and those 5 other states. I mean, right now they are going to be precluded from selling and registering RVs. They're effective January 1st.
So finally, if we're bumping along the bottom now, what is the thing that you're waiting for to unlock that upturn? Is it going to be more of a decrease in rates, or is there something else you're waiting for?
Two things, really: a decrease in rates, a little bit of rate inflection, is we need a little bit more rate relief, and then consumer confidence. So those are the two things that really propel our markets. And so if we see a little bit of that, we would expect a little bit of inflection at some point here.
All right, Andy, thanks so much for coming in.
Thank you very much for having me. I really appreciate it.
Yeah,